Good morning. It's Monday, August 19th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after Friday's explosive record-breaking rally in the gold market. You do have December gold down $10 at 25.27. In the overnight session, the high was 25.49.90. Somebody came out, clearly defended that 25.50 level, probably some big player up there. If you look at the call options that expire in about 8 days, about 5,000 contracts at that level. So they'll probably try and keep those prices below there so those options can expire worthless. Now looking at the September contract on silver, up 7 cents, 28.92. That's being helped supported again by the copper market, up 400 points at 418 last. A couple other standout notes: the dollar index is a bit lower. 2-year treasury yields are also a bit lower here today. Bitcoin down $1,700 and crude oil futures down 71 cents. So problems still in China. Not a lot of economic activity in China, hence that copper or that crude oil market being a bit lower. And I really believe that the copper market here, with the discussion about that strike down in Chile at one of the largest mines that took 5% of the world's copper offline for part of last week here, is what's helped support prices. Now this week here, we do got a little bit of economic data coming out here, but mostly what everyone's going to be really looking at is on Friday, we're going to have Jackson Hole, where one point they did announce an interest rate cut at that level, but they most likely won't do it here. They're just going to map out, and they're going to look for clues delivered by Jerome Powell here, and it'll provide us with a path forward on monetary policy. Now, looking at some other things with the economic news that came out last week, Goldman Sachs reduced the probability of a U.S. recession next year from down to 20% from 25%, and they say that if the jobs data continues to hover like around where it's expected here, and we continue to remain firm, we could see that recession probability drop to 15%. So a lot of Fed officials speaking here this week. We will see some leading index month-over-month numbers come out here today. Not a big mover and shaker. FOMC member Waller, he speaks as well today. Not a big mover and shaker either there. So we'll get some PMI data coming out on Thursday. That flash manufacturing PMI data, that's going to move that silver market quite a bit. Same thing with the copper market, but really it's going to be all Chairman Powell and Jackson Hole. So if you look at the CME's Fed Watch tool, we're a 73% chance that the Fed cuts rates 25 basis points and a 26% chance that the Fed cuts 50 basis points, especially after the retail sales number. So I would lean on that 25 basis points. That's where I was always going on it. I thought 2 weeks ago when we shot up to 100% chance of a 50 basis point cut, I thought that they were crazy. So you get into the gold market, look at the chart here, making a new low here as I'm speaking. Totally profit taken here at the moment. I think traders are a little bit nervous here that he comes out with a little bit of a hawkish spiel. Plus, if you've ridden gold up this much, why not take a little bit off the table here? Technically, it looks very good. The average true range $40 a day, so people are most likely going to look at buying that kind of correction here down at about the 2,500 level. I'd expect to see some support come in. Now you go to the copper market, back at the 200-day moving average, slightly above it. Nice to see it get a close up here. We've been up about 3-4 sessions straight. 428 is really the critical level on that copper market. And then silver, the 50-day moving average is going to be right at about 29.38. I would expect that to be the first kind of major resistance point. You have DMI plus crossing over minus, which is great. You also have stochastics rising into overbought territory. Remember, it doesn't mean that it's overbought. It just confirms that the trend here is bullish. So you got any questions, give me a call, 312-858-7303. If you get the metals edge, I put out a great piece with all the quantitative data that surrounds a lot of the things we're looking at. Also, we run some algorithms, some AI here, like on the gold market. Today's probable range, as long as the upward trend comes in, 25.27 right around here would be your first level support. 25.0790 below that, 24.88 below that. Those are some levels people will look at as far as re-entering the market. 25.49 and 72 are your critical levels of resistance here. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, being up suitable to all investors. Good luck, good trading.